Hey guys, how's it going? In today's video, I'm gonna attempt to do a video on Aphria. I'm gonna apologize if I did something wrong, I got something incorrect, but I'm gonna try to attempt to do a video on it, and you guys are gonna rate if I did a good job or a bad job from the likes and dislikes and comments. So please comment below, and please dislike my video if you really disagree with what I said, and like it if you think I did a good job of the video. Anyways, so this is Aphria's Q4 sales. So this is the year end. They did okay. They are one of the lowest cost producer in Canada, and they're also one of the very few companies that's profitable, and that's the reason why investors like Aphria. So I'm gonna be discussing how much money they're guaranteed when the rec market opens in Canada for Aphria. So let's begin. I guess Aphria has one problem. They are a low cost producer, but because the greenhouse, the costs is low, but the quality is also low too. So that's the biggest problem. They can't really grow super high quality products. But they did purchase out Broken Coast for $230 million. They paid $10 million cash and the rest in shares at $15.09. I guess the day they announced this acquisition, the stock rose according to this article. I could go read this article, but I really don't care. They are guaranteed a supply agreement in Ontario, 59 products. Of course, nobody has actually announced a guaranteed supply agreement from Ontario. I think it's kind of like a free-for-all where they can put like a certain amount of product on the shelves on the online store, and depending on who sells the best, they will get more supply agreements over time. So yes, it's good and it's bad because Aphria doesn't really have a recognitional brand. Broken Coast is good. Broken Coast has really high quality products, but according to my research, Aphria's product is not super high quality. So that's a problem, and they are competing against Metroleaf, Aurora, and Canopy, which all uses indoor facilities, so they can grow super high quality products. And then there's also another 21 licensed producer that's also competing in the Ontario market. So it's really hard for Aphria to really compete in the Ontario market. At least this is my opinion. I could be totally wrong. Maybe the Ontario market is the biggest market, who knows, and they beat Canopy, Aurora, Metroleaf, and all the other licensed producers, and the number one company selling the most product, Ontario. I don't know. It's all speculation at the end of the day. Unless there's a guaranteed supply agreement, we don't know exactly how much Aphria will have in Ontario, or what kind of supply they would have. They're guaranteed 2.7 kilograms in Manitoba, so that's nice. That's a province that I don't think Aurora and Metroleaf have, but Manitoba has a very small population. I believe like less than 1 million people, which is nothing. And then they have a supply agreement with Alberta. Fortunately, there's no actual guaranteed supply agreement, but they do have an initial order of 870 kilograms, and if that product completely sells out, then I guess Alberta will order more from Aphria because they have a supply agreement with Alberta. So depending on how well Aphria sells their product in Alberta, they could sell a lot more. So depending on their marketing, their branding. The problem with Alberta is Aphria doesn't have any Aphria branded stores. So while Canopy has Tweet branded stores, and Aurora has Aurora branded stores. So Aurora and Canopy will do extremely well in Alberta, while Aphria might have a struggling time depending on how well their brand and their recognition is in Alberta, which, you know, is not their hometown. So, and Alberta really likes supporting hometown companies like Aurora. Who knows? Who knows? Maybe they'll sell a lot more than 870. They probably will sell more than 870 kilograms, but it's tough. It's tough. It's a tough call. Aphria has a supply agreement with British Columbia for 5,000 kilograms, which is nice. Aurora and Metroleaf still haven't announced how much supply agreement they're able to sell in British Columbia, which, you know, sucks, but whatever. And then they have a 12,000 kilogram per year in Quebec, which, you know, adds up. But so I was gonna put everything on a piece of paper and write it down for you, but then I found something. So in this video, in this I guess annual report, which was released on May, this is for, I guess, August 1st 2018, because that's when they released the report. It's for the cities of British Columbia, Alberta, Manitoba, New Brunswick, and Yukon Territory. This is not including Toronto that they just got, but they said that they secured over 21,000 kilograms throughout Canada right now. So 21,000 kilograms per year. So you take out calculator, 21,000 kilograms divided by 12. They're guaranteed 1,750 kilograms per year, and per month. So you times that by 3 months, they're guaranteed to sell 5,250 kilograms. You times up by $5.50, and they should be making roughly $28 million or $29 million per quarter off of just the Canadian rec market. This is not including the medical patients that they have. So this is the minimum. The $29 million is the minimum, because they said over 21,000 kilograms. So that's the minimum. It could be $30 million plus the $12 million they're making right now. We could be seeing at least 30 plus 12, $42 million, $45 million just in Canada alone per quarter from the Canada market. And then if you include international market, if they manage to tap the international market, this could easily rise to over $50 million per quarter. Still way below what Aurora will have. I think Aurora doubles them in Canadian market, while Canopy definitely doubles Aphria in the Canadian market. So Aphria will have revenues half as much as Canopy and half as much as Aurora. I think Aurora is going to be in the hundreds of millions. I think Aurora is going to be at least 100 million, potentially $300 million if they manage to sell everything they produce. While Aphria is like 50 million to maybe 100 million per year, depending on how well the international market sells. And yeah, so the year end was May. So June, July, August, if they get a supply agreement in these months for Q1, then the Q1 should be 21. Sorry, I gotta do this again. So So 1,750 kilograms. They're making around 12 million right now. So you times that by 550. 9 million plus $12 million. So for the Q1, they can potentially make $21 million, maybe $25 million. And then the Q2 should be in the 40 plus 40 to $50 million. So Aphria at $3 billion market cap, unless the international sales really pull through for them, right now seems kind of overvalued. But we'll see how well the international sales are. I apologize for being so not more positive about Aphria. I know there's a lot of Aphria shareholders out there. I don't see the value in Aphria. I mean, they are a low cost producer, but then they produce low quality products. So if their products don't sell very well, then they won't get, like, they won't be able to make a lot of money in Canada. So it all comes down to how well the product sells and how good their branding is and how well they can compete against competition like Aurora and Canopy, and I guess all these other small license producers like Cantrust, the Organigram. There's so many companies out there, so many smaller companies. Kronos is kind of laughable. They have even the smallest, I think they have like the smallest supply agreement in Canada, so, and they're worth like $2 billion. I don't get it, but whatever. Anyways, I guess this is it for the video. Thanks for watching. If you like this video, please give me a thumbs up. If you dislike this video, please give me a thumbs down. Subscribe for future updates and have a great day. Bye.